underestimate the ability of traders to do the dumbest possible thing. Last night during after-hours trading, a bunch of money managers bolted from stocks right between when the U.S. declared China to be a currency manipulator, but before the Chinese backed off and let their currency appreciate in value. Some genius sold Apple down at $186 last night. If they had waited, they could have gotten out at $197, where Apple closed today, not even 24 hours later. Another luminary obliterated Facebook in the mid-170s. It's now 184. Then there's the stock sage who dumped Microsoft at 126, right before it rebounded to 134. These sellers ended up fleeing at the worst possible moment. They violated every rule in the book. I don't want you to repeat their mistakes, so let's go over everything these dopes did wrong. What are the rules? 1, panic is not a strategy. There was nothing much to the currency manipulator designation, but these frightened traders blew it completely out of proportion, acting like it was going to lead to a 2009-style financial crisis. It was pure panic, and it made no sense whatsoever. 2, there's always a better moment to sell than into the maelstrom. I know because I've done it myself. You can read all about my own idiocy in Confessions of a Street Addict. If these bozos had just waited until the morning, they could have easily sold at much higher prices. All they had to do was nothing. 3, after-hours trading is like the Wild West, except there's no sheriff. Some of these deep-in-the-hole prints from last night were the work of a very sophisticated sell program that was linked to futures to individual stocks. Like, if the market looks like it will fall 3% tomorrow, sell Apple down 2% and we'll make out like bandits. There's a lot of money to be made in algorithmic trading, but it can also produce some incredibly idiotic moves, like it did last night. 4, please check your emotions at the door if you're going to trade. So many traders and commentators despise President Trump, and they're letting their seething resentment get the best of them. If you want to be a good investor, you need to leave your political opinions at the door, as I try to do. Just because you hate the guy, that doesn't mean he's going to wreck the stock market. There's another cohort that believes Trump has taken a knife to a gunfight. How many times have you heard that with the trade war in China? To them, he's genuinely crazy, and there's no rhyme or reason to anything that's happening here. There's way too much doom and gloom. That's why I went on TV last night to simply say, dial it back, people, because the negativity had gotten out of control. I think we have the upper hand in the negotiations because our economy is stronger than theirs. We should stop being so defeatist. Rule number 5, never sell all at once. Now, this is a corollary of my view that you should never buy all at once. Last night, the sellers just kept whacking and whacking stocks for more than an hour after the currency manipulator designation came out. Did these traders have any situational awareness? Did it occur to them that, maybe the market knew this was coming? I mean, how is it a surprise when the Treasury Department tells us something we've known for ages? China manipulates its currency. News at 11. Look, I know it's hard to remember these rules when the averages are getting obliterated and everyone's terrified. But these things wouldn't kept happening if investors would simply stick to disciplines. That's the whole point of having rules, so you can fall back on them when you're too overwhelmed with emotion to think rationally. That's how you win, not lose, at professional trading and investing. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.